Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video, we're going to go into the three chart patterns or candle patterns, candle formations that you must know. These are the three. We're not going to go in depth to this, but this is the first one. It's called swing points. First one is swing point. And the importance of this is it shows where the areas of liquidity is, because stops and orders get put in above or below swing points. So there's a swing point, here's a swing point, swing point, swing point, swing point, swing point, swing point. Okay, get it. Let's go back to me as an artist. Dun, 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 dun. Let's do that. Okay, that's a candlestick that we'll be using for our examples. So swing point is nope, no, I don't want that. Three candle pattern. Middle candle higher than all three, higher than keyboard other two beside, or let's duplicate that. Lower. Lower. No, this one's higher. So it's a three candle pattern with the middle candle being okay. Is there a way to group this? So template, nope. Let's do this. Shift, select, nope. Alt, select, nope. So I can't group that. Okay, cool. It's interesting. So for swing high, this is what I would be looking. Okay, let's just do this. High. This one's higher. Oh, it's locked. I can't copy it. Okay, interesting. You see this candle is higher than this candle. Next one would be lower. Actually, I should make this one clear or blue. Let's do blue. I'm making it blue just to show that it doesn't matter the color of this candle, doesn't matter the color of this candle, doesn't matter the color of this candle. As long as the high is higher than this candle on the left and the candle on the right. yeah, candle. So that's how it looks for swing high, and the swing low would be the opposite. I can't flip this. Okay, drag lower, lower, lower. Yeah, there we go. So that swing low, it's a 3 candle pattern. Dun dun dun, boom. That's a swing point. So you get swing highs and swing lows, and it goes deeper, but we're not going to get into it. So just off the rip, that's a swing high. Blue, bring the opacity down. Swing high, swing low, swing high, swing high, swing low. I'm just looking for obvious ones. Swing high, that's a low. High, swing high, swing low, swing low. Yeah. So these swing points are where orders are put in below swing lows and above swing highs. So that's orders to either enter the market or exit the market. But there's orders there, and people want to take action on those swing points. So by knowing this, you can take advantage of it by waiting for it to go below a swing low by a certain measurement and then buying it, or as soon as it gets below that swing low, just depending on the situation. And yeah, depending on the situation, as soon as it gets below the swing low, you can buy it and then look for a move up, like over here. As soon as it gets above that swing high there, you can buy it and then look for a move down. As soon as it gets above the swing high here, you could sell it and look for a move down. Sell it and look for a move down. Here you could buy this and look for a move up. It looks simple the way I'm showing, but this really is one of the most important things I use in my trading, because everything gets anchored off swing points. All my fib levels, all highs and lows are swing points. Yeah. Now the next thing we're going to be looking at, obviously, is this all. Fair value gaps. Now these are gaps where the low and the high of the candles don't meet. So it's a 3 candle pattern similar to swing points. Come on. So it would be, why is it so difficult to draw? Okay, there we go. Lower, 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 lower. Okay, let's do this. Extend this one out so it looks more realistic. Okay, that would be this would be a fair value gap. So this area where there was no buying or selling, sorry, no buying. no buying. So with this, you need to know that color is important. Yeah, they discriminate. Red equals down. With equals. I don't even put in equal signs here. Red is down. Let's grow that. Green is up. Red is down, green is up. So this candle right here, so the low of this candle doesn't meet the high of this third candle, and this gap in between, that's what's looked at as a fair value gap, because there's no one allowed or no one given time to buy during this area, and so it wasn't given fair value, and that's why it's called that, I think. So when it usually, what would happen is the market would trade away and then come back into this gap and move lower if it's red or higher if it's green. I'll show you some examples now. This will all be, since I can see the chart, it will all be cherry picked. So here, for instance, green moved up. Let's do this. Opacity down. So that's a fair value gap. This high. The high of this candle didn't meet the low of this candle, so that's a gap. I'm just looking quickly, obvious ones. The low of this candle didn't meet the high of this candle, that's a gap. So you see it moves lower off this gap. Here's the time when it didn't work. High of this candle, low of this candle. You'd expect to move down, but it's not giving that. That in itself says something. Let's look at, there's a lot in here. Just look at this one at the highs. Move away. Over here. So I'm just looking quickly. Whichever one catches my eyes, I'll just mark those ones out. Over here. The tiny one up here, but you get the gist of it. There is more to fair value gaps, and I think a good YouTube channel for learning about gaps, especially fair value gaps, is Arjo. Let me just type this out. arjo.io. That's the guy's name. He's a YouTube channel. Go and check him out. He does really good work on explaining fair value gaps and explaining which one is what, how to use them. It's just, I don't have the patience to sit down to explain all of it. I can use it, but I'll only explain all of it in a video. Just don't have that patience. It's really interesting and intriguing. And then the next one is called a breaker pattern. these are the three things I use in my daily trading. So this is how it looks. I'm going to use a line chart to just show what it visually looks like. I actually made it very big. Okay. Let's move this up, down. So this is the pattern. This is the area of interest. Okay. And this is the area of interest. So if I explain to you like this, makes a high, the market makes a high, a low, a higher high, and then a lower low, running out these lows, and then when it returns to this swing low at this point, you would be looking to sell on the red candle. So let's do this. And inversely, if it's a green candle, you're looking to buy. So just go to a quick example. Can I find one that's actually good? I think there's one here. Dun, 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 dun. I saw it, but I don't want to use that example. I want to see one that's instant. And it worked really well. Here's one. Not amazing, but it'll work. Dun, 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 dun. So here we go. These highs, this low. Dun, 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 dun. So it goes high, low, higher high, lower low, lower high. Do, 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 do. And the areas you're looking to sell is inside these red candles. So that area, let's just mark it in red, sell. There will be a selling area, and this will be rejection. This will be a target. So it goes high, low, higher high, lower low, lower high, and then your target from projection of this range. So you see the pattern is the same as, just take you back to this bad illustration. So it's high, low, higher high, lower low, return to this low, and then a sell off. And the beauty of this is that this pattern, it traps traders in. So this area over here where the high is made and it gets run out, that's where people are trapped. So they maybe entered this high, running into profit, market reverses on them, right? And they get scared, they close the position and open a buy, or if people are entering buys above this high, they enter a buy and market goes against them, and they're trapped thinking that they were now selling, now they're buying, so they should be making money, but they are trapped. So this is my favorite entry pattern, coupled with this fair value gap. When I see this, I smile. So that's the three. I'm just get it all on the same thing. Swing points. And then fair value gaps. That is the three. Okay, there's two illustrated, but that's the three price patterns that I look out for every single day. And this is, I would say, what I mainly use. Not solely, but mainly. Sometimes I'm using other things, but yeah, these are the most important to me. And if you're looking for more insight, SG R Joe swing basically value gaps, and then MMXM something dot something. I think MMXM trader, something like that. Those are the three that I would say are worth following. Let's just say honorable mention. Honorable mention. So those are the things, patterns. Those are the people who could teach you better in these patterns. And yeah, safe.